A sudden plunge in the share price of Synergy Grid in Development, or SGP, can raise uncomfortable questions for any income-focused investor. What could force a stock, often seen as a safe infrastructure play, to shed nearly 11% in a single trading session without any dramatic news flashes or corporate scandals? On June 22, SGP's market value sharply corrected. Over 19 million shares changed hands, sending the price tumbling from 32.50 to 29 pesos. For a company that's typically stable, the violence of the drop was a jolt. Yet the answer wasn't hidden in the fine print of a disclosure. It lay in the financial logic reshaped by central bank policy. SGP represents a unique slice of the market. It doesn't build or sell products. Rather, it packages economic exposure to the National Grid Corporation of the Philippines. Investors buy in for dividends and the ability to plug into a hard-to-replicate asset. When rates are low, this model shines. Regular dividends, perceived stability, and a fair yield attract capital until rates change. Recently, the Bangko Sentral ng Pilipinas raised its key rate to 4.75%, with inflation forecasts remaining elevated for the next few years. As the policy rate climbed, SGP's dividend yield, hovering below the risk-free rate, looked far less attractive. Even after the sell-off, trailing yield only improved modestly, and on a recurring basis, actual cash yield settled near 2.4%, well below the benchmark. This is the heart of the matter. Accounting earnings might appear robust, but spendable cash is what counts. As BSP lifted the hurdle, investors looked elsewhere for income, and SGP's share price quickly adjusted. It was not about breaking news, it was about market math and changing expectations. Income stocks must regularly reprove their worth as the risk-free rate rises. SGP remains tied to the promise of grid economics, but the market now demands either higher dividends or a lower price to balance the scales. For investors, the lesson is clear. When central bank rates go up, the definition of an attractive yield shifts, and income stocks must find new ways to justify their place in a portfolio.